Hey everybody, Booksy here. If you thought this stock, ATER stock, was manipulated before, get ready for some mind-numbing crap this morning. First of all, where are we going, right? Our nice little cup up here is certainly playing out much like the way I kind of thought it might, which is it's going to run up. We've had the first U, here's the second U. And yeah, so far it's been playing out. And what you guys are seeing on the screen, I'm not really going to talk about that right now because it's not actually as important as this. I think this might be the most significant thing that I've found yet. So what you see right here is a Fibonacci speed fan. And this is one of the tools that you can use in a lot of your programs. And it's actually called Fib Speed. No, that's not it. Right here. Fib Speed Resistance Fan. Fib speed resistance fan. And normally, the way that you would use this thing, let me turn this one off, is that you would take this and you would look at perhaps, from a bottom value, maybe you would do something like this, and this could help you predict. You probably would want it to be more like, I don't know, you can widen it and narrow it, and I think you probably want this to be pretty wide, but usually you can kind of helps you predict. You can kind of see here, that's decent. It helps you predict like certain resistance levels. You see that before they happen. You can also do it from like the top of a move. Normally, and it also usually plays out pretty well. It's not perfect, but it's meant to be sort of a way of interpreting the data and also helping you to maybe guess where you might run into some resistance. So you could do like a cross section of this. What I did is I did it in reverse. And the reason I did this, I will get to it in a minute, but just long story short, $6.24 has been the target for this stock since January of this year, maybe even before. Let me repeat that. $6.24 has been the algorithmic price target for this stock since the beginning of the year. And I am 100% certain of that. And here's what I discovered. You can obviously see here that this matches up almost perfectly with the fib fan, but in reverse. And you might be thinking, well, what does that mean? Well, you all know Fibonacci are based on like the golden ratio numbers, like 1.22 or whatever, and they come up with these mathematical probabilities and all this other crap. The point is that normally we see these in like retracements, and we use them to sort of predict what might happen in the future. I don't think I've ever used it in reverse to see how a stock has tracked. And when I figured this out, you can hear it in my voice. When I figured this out, it blew my mind because I was trying to figure something out, and I'll get to this later with this pattern right here that I talked about in the last video. And once I charted this in reverse, I just could not believe what I was seeing. Okay? As you look at this, look at where these touch points are on this fib fan. Look at this. This is how this thing has traded to this point. It is using these mathematical formulas, these numbers, to get us to this point. And that's not super far-fetched if you know anything about like algorithms. I mean, maybe they do converge all the time on a single point. But my mind was not ever thinking that this was like a predestined move, right? Because we moved really far down. We moved really far down. And I kind of thought that that was just part of whatever, like the FOMO. And I even suspected, based on volume, the volume uptick that happened in this area right here. I said in another video, I thought maybe there was something to this. Like they knew this breakdown was going to cause it to run up past the previous support line, right? And basically start a new bull trend. And this was just part of that bull trend. And I said that in previous videos thinking that, this line may have been significant long-term, yada, yada, yada. Well, look at this. Look at this. When I figured out that this thing was at 624, not only does it track perfectly with this particular wedge, but if you go back in time, look at this tracking right here. You see that? Look at what line that's hitting. This is hitting on that Fibonacci line as it goes down and tracks. This has not just been a short-term track. This has been a long-term track to this point. And what's amazing is if you go back to January, look at this. This is January 21st, 2021. Where is this pointing? This line, this downtrend line, before we had the last run, this is like right before the cycle shifted. This downtrend line is pointing to this target, this convergence right here of $6.24. How much control do you think retail actually has over this thing? Because if you look at it, all of a sudden, knowing this, okay, go back in time. Look at $6.24. Look at this. 1, 2, 3, 4, 5, 6, 7, 8. Gap here. 9, 10, almost 11. Look at how many touch points this has, this particular line has over the life of this stock. Okay, so this is a number that is mathematical in this stock that some algorithm is using. It thinks that this is the baseline number. And what happens when we extend beyond that number? Drastically. We shoot back up to it, right? It's this flat line right here, okay? This flat line right here that my mouse is pointing to. We shoot back up to it and get above it and we ride it. What happens when we overextend far away from it? The algorithm says, no, we got to get back down. And it calculates a move back down to this value. What is this move right here? What is this? The thing is, and here's, I'm going to stop ranting and I'm actually going to give you an explanation for how I found this, because it's fascinating how I found this. Okay, why I found this and why I think this is legitimate and why I'm not a crazy person, even though I sound like a crazy person right now. I know I do. Okay, you can't look at this stock the same way after you understand this, okay? You can't look at any of the stocks the same way. This is a year ago, right? We're in mid-November. This is a year ago, and this thing was being set. They felt like this was too overextended, and even I bet you money right now, I would do it right now, that if we started drawing more lines, I bet you they would converge on this point right here. I can't really see that one very well. But my guess is, yeah, look, there's a touch points right there. Yep, look at that. Oh my goodness. This thing has been predetermined to return back to that $6.24 value. And it needed to get back there for what? Probably for accumulation. This was accumulation right here. This bouncing up and down sideways action on this 624, accumulation before runs, right? And then we got overextended, we burned it down back to here, we went back to this value, okay, on our indicators as well. You could not have predicted this move because there's not, remember here, and this is what's mind-boggling to me right now, okay? You could not have predicted this drop down to this particular value, wherever it ended up, like $3.16, right? Because remember, before this drop, you would have maybe like looked at this line. I mean, there's just so many other lines you could have drawn, right? Maybe this line. Okay, there was nowhere to draw this line right here. And certainly, coming into the present day, you could not have possibly known that this and this marker would have lined up. When this shot up, remember, we were back here. People would have been drawing these lines, okay? Now, maybe you were like really smart and you figured out that, okay, well, look, there's this kind of ongoing trend line here, okay, that sort of tracks with this thing. And I figured this out, you know, by just basic charting. Like, you're not telling me anything new. Fine. You could say, like, there it is. There's the trend line. It's kind of returning to it, coming back around it, so on and so forth. But there's no way you would have known unless you knew the cycle, right? Remember? Because this is right where the cycle resets. Unless you knew where the cycle was going to reset and where it would touch again, you would not have known that this line would have existed. Because this line, until it intersects, goes on indefinitely. And you remember how I said I thought that they were trying to get it down to like these values? I kind of think I was right, but I also kind of think I was wrong. I think that it was trying to get to this value and this right here, was to establish this new bull trend coming off this baseline. That this is like a rising low end, like almost like the final bottom, if you will. It's like coming up, right? It used to be maybe zero, then it's like, up here at $1, whatever, $1.70. Now it's at, $3.30. I'm not saying that it can't go down below it ever again. I'm just saying that mathematically speaking, it goes down here and it uses this, the algorithm uses this to create a massive buy-in that propels us up over, and look at where this wedged. My goodness, look at where this wedged. Almost right on that same line, that 624. So not only did they rocket us up past it, and that's why you had this extremely low volume down here, and yet it still rockets up past it. It consolidates right above it, rockets way beyond that line, and then comes right back down to it. And you might be thinking, you could have found this a million of different ways. You didn't have to use this fib thing. But let me just go. Now I'm going to go back. I'm going to go a little more methodical. So this is for people who want to know the why. Why did I figure this out? Why did this happen? Why do I think it's significant? What led me to do this? And I actually think this part is in some ways more significant. Okay? So there was a big glaring concern that I had recently. And I'm going to go ahead and take this out, all right? And I'm going to get rid of this line right here. We don't need this one. Okay, there was this concern that I had recently when I was seeing people draw this wedge in different ways, okay? And I was not really sure why people were drawing this wedge in different ways. So I showed you a couple different ways, but let me show you like what I mean by that. So here's what I've been noticing. There are some people who have been drawing this wedge more or less as this like large wedge that breaks out really early. Like this isn't even like 60% of the wedge. This is like, well, maybe it's about 60% of the wedge, right? And that's like a sweet spot number. If you're doing technical analysis, a lot of times wedges will break at 60%. There were people that were doing this, all right? There may be other people who looked at this and said, well, you have to chart it in like different ways because you don't know necessarily where the supports are. And I was kind of like that too. It's like you can chart this a dozen different ways, okay? You can chart it like this, where you're looking more at these lines and see how they connect with these right here. And then this would be like returning to the wedge, right? And this hits a lot of points. It also looks like a drop down to the bottom here. You could do it this way, for sure. I mean, this is legit. I don't see why not. You could also chart it, in a different way where you're basically looking at, like this right here where these touch points are, and this right here is the bottom. And you can kind of move your chart around. And then this looks more like, oh, this is us getting, back inside the wedge for a little bit. And I think these are all valid because I think that because different retailers trade they might trade these patterns differently. And everybody has their own perspective on it, right? And the algorithms know that, and they chart it in different ways. And here's the fun thing is if you switch off logarithmic, okay, and you go back to linear, a lot of times where you drew your original chart lines, they don't add up. And you might be like, well, that kind of blows that out of the water, right? Well, not really. I mean, this one kind of adds up, right? You get this sort of top here, and then if you go up, it actually lines up pretty well with the top there. And so this actually creates a pretty convincing wedge line where you had this kind of early breakout, which falls in line with all the rest of these cycles where we break down and create a new wedge from a new U. But what's very bizarre is that, again, you can chart this like a bunch of different ways. And you could chart it like to these lower things and say, well, I don't think these were extremes, and maybe this was the original wedge, and we were already out of it. And then look at that kind of bounces on the top of that line. Very peculiar, right? You could chart it like this, where you say, well, I don't think that this is the farther point of the wedge like this. I think this was the wedge, and we already kind of broke out of it. Again, this could be thought of as like testing, and then maybe even like breaking it. You could chart it like this and say, no, this was the breakout of the wedge. You can clearly tell that this is where the wedge broke out, right? It's this huge run up, and then it drops down. I've not been doing any of that because I've been doing it based on the cycle. Because here's the thing, if you go back to these other ones, all right, and you take it into linear view, this right here doesn't really make any sense. And it's the same for all the other cycles. It's the same for all the other cycles. Basically, if you do it in a linear view, it doesn't make a whole lot of sense. This points to nothing. Now, it does kind of touch there. It's kind of interesting. And I think, again, it's because some people are charting with a linear view. And so there you see these kind of price actions happen when they hit these different price targets. But it doesn't make a lot of sense of this right here. This just looks like a breakout and then consolidation, maybe, from down here on this line that we touched. If you go to the logarithmic view and we adjust this, this makes a lot more sense. Because if you look at it in the logarithmic view, suddenly, and I know it's not perfect, all right, I'm aware. All right, suddenly though, I know that these are not perfect, right? These kind of dip below, dip above. But if you look at it, suddenly this right here, this price action right here is very different. Now, you see how it's kind of racing through? It's like it's on the top, it's rattling around on the top, it drops below, rattles around the bottom, drops above. You create this wedge, yes, but look at where the supports are. They're right on where this trend line was. Why do I think this is significant? These two trend lines converging? Because remember, in this cycle, the previous wedge almost always, without fail, points to either the bottom or the top of the next cycle wedge. And this has happened every single time. There was like one time in the very beginning, you see this? There's like one time in the very beginning where it did not happen, where it like points kind of to the middle. But almost every other time, this thing, if you draw the wedge in the logarithmic view, the wedge points almost every time perfectly, okay, to where we're going to see the next top or the next bottom. It is the case of a downtrend. So that's why I was saying before in the other video that I think we were supposed to kind of, I thought at least originally, that we were supposed to kind of rattle around more down here, and this wedge, instead of being up here, was going to be lower. But now, man, now I think it wouldn't have mattered. I think if we had run up or if we had stayed underneath here, I think this $6.24 was absolutely the price target all along. And I think that what we saw is this play out towards that price target. And that's why the Fibonacci is so perfect. How did I figure that out? Let me get to the point here. I know I go along on these videos, but I just want you guys to know how mind-bending this stuff is getting, okay? And how deep we are into this. And this is not, I understand that right now especially, I probably sound like a crazy conspiracy theorist, but this is blowing my mind, like how absolutely on point this was. And how I figured this out was by using this fractal right here, okay? You remember the other day, I talked about it in the last video, this fractal repeats. It repeats when we see the cycle transition. So this right here is the cycle transition. It comes up, boom, boom, it creates a new wedge. We see this pattern, although it's not perfect every time, but we see this fractal nearly every single time. It does look a little different depending on what's going on with volume, where we are in terms of, you know, bullish or bearish trend, so on and so forth. But I saw this fractal repeated, so I used it over here on the transition in this area. And this is where I ran into some issues because I noticed, oh man, let me get rid of my fractal. Don't tell me that. Just a hard stop in the video. I noticed that, let me see if I've got it. Okay, here we go. I noticed this is the fractal, okay? This is the same, I copied and pasted the bars pattern from over here. I know it looks flatter because I flattened it a little bit. I flattened it because we're dealing with a lot lower volume so that we have a lot less extreme, okay? I looked at this bars pattern and I said to myself, okay, I'm starting to see where these things are lining up. You've got this drop off right here after the run up, right, where the cycle transitions. You have consolidation right here. You have a drop. In this case, would have been drop and then a little run up, all right? So you have this consolidation, a little run up, and then you have another drop. And look at this. This is unbelievable. There's a gap down. right there. This is like exactly the same. You have this flat, you have this drop, consolidation, a drop, you have this drop, consolidation, a drop, you have a run up, and then it drops down, we have a gap down, then we have this little bounce along what we presume would be the next start of the wedge, or like this is a wedge, but it also is a start of a U shape. Then we have right here a run up, a consolidation, a run up, a consolidation. Then we have a break. And in this case, the break went all the way up to the top above the wedge. Remember, we're talking about the previous wedge here. All right, let me pull up. Let me see if I can find the chart real quick. Hang on. Because I've got it right here, so you can see it and compare. And let me show you what I'm talking about. Oh, where is it? Don't do this to me. I had it. It was right here. Now it's gone. Of course it's gone. Oh, come on, man. Okay, here it is. I found it. All right, here we go. So I had this little chart. This is the fractal, okay? So this right here is the same as this right here. But I want you to notice where these are falling. So I'm bringing this up, okay? So this is this area. We have this little run up right here, little run up right here. See that? Consolidates underneath the wedge. It breaks above the wedge, through the wedge. It goes on top of the wedge, and then we hit this little peak. Goes up here. This is remember, this right here is the same fractal. Consolidates. Okay, we have this dip. Consolidates. We have this dip. Look at this hard dip right here. This hard dip to this trend line, and it intersects with the top of it. It's a consolidation followed by a hard dip that intersects this trend line and intersects the top of the wedge, the previous wedge. This right here is what got me confused, because if you look at this, it's the same exact thing. Exactly the same. I mean, it's like, it hurts my brain how much of the same this is. Look at this. Even this spike, run up, this little spike right here. This right here is this right here. It's exactly the same. It's the same trading pattern. The algorithm is running the same way. It's just doing it with lower numbers, lower volume amounts. It consolidates and then it dips. It consolidates and then it dips. This was supposed to be the touch on the bottom of the wedge. It was supposed to be, I mean, it was the top of the wedge. And then it starts running up, and then it starts running up. Okay, whoop-de-doo. So Booksy, you called it out. This is exactly the same. What now? What now? You already knew it was a cycle. You already had the fractal. What more do you want? I'll tell you what more I want. I want to know what is going on with this. I want to know what's going on with this right here. Why, in this case, did it run up above and then go down below and then go back above and hit the top and run? But in this case, the way that we were drawing this and the way that I was drawing it, it didn't look like that. None of the ways that anyone was drawing it, including myself, had the top and bottom be so tight. Because if you look at it, in order for that to occur, check this out. In order for that to occur, this would have been the top of the wedge, or excuse me, this would have been like the top of the wedge, and the bottom of the wedge would have been like this tiny little area, like right here, all right? Like there's this convergence that happens, okay? This would have been it right there. This would have been the tip of the wedge, and it doesn't make a lot of sense. It's like really narrow, you know, this kind of peeks into it a little bit. I was like, I don't know, that doesn't look quite right. But then I looked again, and I thought, well, if it is really truly repeating, then we'll see this. And look, right here, you see this little run up? It's identical, and it peaks into the wedge. It peaks into the wedge, comes back down, peaks back into the wedge again, comes back up, right? And as it's blasting through, okay, this part could be up top or not, but it goes through the wedge. This part right here goes through the wedge, and look where it lands, up above the wedge, up above the wedge. Then we come back down, we hit the thing, we retest. Not only does it hit this line, it basically hits this trend line as well. I know it's moved, but this is right here. Okay, there's a double touch on this trend line. It also hits the U, the new U structure. We might see this, by the way, go down and kind of follow the U more. It could go straight up here, I don't know. But this is the run we've been looking for. So the point is, okay, great, you figured that out, wonderful, but that's not the normal wedge. And I thought, well, what if it is the normal wedge? What if, just what if, okay, this right here is playing out the same way. And this is the wedge. I drew it a little better right here. What if this is the actual algorithmic wedge? Like the trading pattern was actually doing this. And I think this is confirmed in my brain now, because this is what led me to discover this wedge right here. So I used the fractal pattern that we just talked about, okay? Oh no! This fractal pattern right here to figure out where the top and bottom of the supposed wedge was, right in this region, according to the way that it hit through the last time, right here, assuming it was doing the exact same thing and trading around the main wedge, and I came up with this wedge. And this wedge makes no sense. I looked at this wedge and I thought, this doesn't make any sense. This wedge is bizarre. You're coming out of it, you're running around it. But then I thought, well, look, it does have a lot of major touch points. And then oddly, if you kind of look closely, you can sort of start seeing it. There are these kind of fanning trend lines, right? If you look at this and you were just to start drawing out a fan from this point, then it starts adding up a little more. You can see that this sort of lines up with different points. And I thought, well, if that's the case, then let's draw a Fibonacci retracement on this. And when I drew the Fibonacci retracement, my mind was blown because it hits on this Fibonacci retracement way in advance, as if this were some kind of predetermined outcome that we were going to come to this point right here. And we're going to follow not necessarily a certain path, but we were going to follow this Fibonacci diagram, this speed diagram. And that's when I found that this thing lines up with dates way back here, and that even if you're drawing some of these price targets, if you're looking at the direction of the stock, it's all aiming back towards 624. Now, I know that what I just told you sounds completely weird, and it may not matter to you at all. You might think, who cares? Because if the stock's running up, I don't really care. What this means is that significantly, okay, let me get rid of this little wedge. I don't really want to. I like that wedge because I think it is the wedge. It's the logarithms wedge, okay? And this is like a narrower view of another view of that wedge, okay, on a tighter time. But like, if that's the case, it makes perfect sense. This is what I'm trying to get to, okay? If that's the case, it makes perfect sense why this reacted the way that it did. Notice how far it dips out of this wedge is kind of like how we're basically like correcting. All right, I know that there's another line here. I'm aware of that. I drew that line here, and certainly like we could see this as more of like channel lines, but the fact is this is moving away from this line. All right, and that's why I said it's a widening channel, and it is. It's a widening channel. But if you look at it in terms of where it is in relation to, look at this line right here, this little green line, that's part of the fan line, and this one as well, it's like a top line, okay? And I might have drawn it a little off. I'm not going to say I was perfect on it, but just look at this. The further away it comes, and even right here, it's just like bizarre. It comes down and then it sort of sits on this line like it's going towards 624. The further away it comes, it has to just retrace back into this fib area. So you see why, now we can see why these drops were responded to the way that they were. And then when we got here, right, it was like a hard rejection and come back down. We didn't pass into like this 0.25 range. Okay, so like basically what I'm saying is ATER is manipulated, which we already knew, but also that I don't think retail had as much impact as we think it did. And I've already said that retail did not reset the cycles. I mean, it changed them because, yeah, like this is more dramatic than what we've seen with the volume, but it did not change the fact that this thing cycles. We're on a new cycle now. I'm pretty darn convinced of that. I've called this out for like 3 weeks now. Well, 2 weeks. I guess I was wrong, a little wrong at first. I thought we were going to go further and pop down. But then when I redrew the diagram, I realized we were already, resetting down here. I drew this a while back, all right, and it's played out. And I'm not bragging. What I'm saying is that it's impossible to deny the patterns on this stock, that it's been in a cycle pattern. And now I'm looking at it in a new way. I'm looking at it as price targets and like where we're going to go from there. We could take this and possibly apply it to the future if we can kind of summate where we think the next price target might be. And you might be thinking, well, like, how do we do that? Well, if the downtrends all pointed to this price target, maybe the uptrends also point to a price target that we don't know about, but the algorithms know about, like an upper end price target. And if that's the case, then we might be able to figure out where this thing might be going next. Like if you take this and you sort of shoot some lines up, all right, these are mythical numbers. I'm starting to sort of see it more clearly now. These are like mythical numbers that the computer has as like upper bar limits for this particular range. And they're probably never going to hit it, right? But anytime there's a bull run, okay, I'm like doing this right now. I'm just doing it with you. But anytime there's kind of this bull run, we sort of test whether or not the stock wants to move that direction. You see that? So right up here, this is $80. Now we broke the test. We didn't do it. We didn't get it. If we were going to get it, it would have happened like probably here, right? The stopping point. It didn't. It got shorted down or sold off, whatever. It followed that retracement down to that 624 area, because that's where they wanted it to go. And it also, of course, you know, was the price target for a lot of this other stuff, right, down in this little pocket, okay? But I'm saying that these bull runs are indications. If the bear runs are indications of where we're going, if they can point to where we're going, then there's no reason that these cannot also point to where we're going. And I'm not saying that we can figure out a perfect price target. That's not what I'm saying here, because as you saw, oopsie, once you pass like the threshold, this would be the threshold right here. Once you kind of pass the threshold, the algorithm's going to recalculate to some other point in the future. It just is. And it makes sense that it would. So now, if we look at where the bullish patterns are pointing, I'm not saying this thing's going to 145. I'm just saying that if we look at it now, we kind of have to like wait and see what happens, and we'll start seeing maybe where these might be trending towards. But I wouldn't put it past it, like if we could figure out again, like maybe, and I'll have to do it over here and see if these were all pointing towards this price target. But if that's the case, and this was like right here, it was determined that we were going to hit this point. That's what the algorithm said. And then right here, right before this, it was determined we were going to come down here and hit this point. Maybe there's going to be another point in the future that we are going to hit. And it doesn't have to be up here. It could be low. It could be like a flat line right here. Okay. But maybe that's the case, or maybe it's right here. We don't know. Not yet. But my point is this thing is absolutely 100% running on an algorithm on cycles. We are now on a new cycle that is like 50 bars long. I think I keep saying 55, but I think it's, this is not days. I can't do it on this one. I've been doing it on days. We're now on a new cycle. Okay, this thing is repeated 3 times, 3 times, 3 times. It's 50 bars. So we're now on the fourth cycle. So this was 46, 46, 46, 74, 74, 74. Then it was 67, 67, 67. And now it's 50. I would assume 50 and 50. I don't know for sure. Okay? But this is mind-boggling stuff, y'all. And this means to me that this was a price target from way back here. And like I'm convinced of it. Which is incredible. And if anything, this would make me more bullish about the stock. Perhaps it makes me a little bit discouraged knowing that, man, like retail did not really change what happened, but maybe retail was used. Maybe retail was like a part of this. And we're going to see what happens. We don't know if this is going to run hard or if it's going to consolidate here or if it's going to go flat for a while. We still don't really know that. And I think it's way too early to tell. But what we do know now is that this thing was basically like gravitating towards this point, like getting sucked into a black hole. And that this right here was the algorithmic, basically trading range that was being used. And this is why this fractal repeats the same way right on these lines as it does over here on these lines. Long video, sorry. If you didn't want to watch the whole thing, oh well. But I personally think this is crazy stuff, and my mind is like completely numb and blown from all this, and I can't even, in some ways, I can't even believe what I'm finding. In other ways, I'm just like, yeah, whatever. Like, stock market's manipulated, of course, you know. But it's more than just numbers to me. It's like getting to know how these algorithms might be set up is absolutely phenomenal. Because if we could figure that out, and maybe someone else who's smarter than me is going to come in and just like figure this out. If we could figure that out and you kind of could know behind the scenes what was going on with this algorithm, you could trade it for an incredible amount of money. But beyond that, you would be equipped to know where you're supposed to buy, essentially. And then potentially, if we were to look at a squeeze, you remember how I said that there was this kind of threshold level, right? Where like there's this place, this like mythical number that this thing is pointing to. We already passed the threshold, okay? We didn't hit it. But it's pretty clear and evident to me anyways that there's this kind of like upper limit number that's in the algorithm. And whenever we uptrend, we kind of go towards it. Just like when we downtrend, we're going towards it. I think it's just a theory, but I think that if you were to get this thing to squeeze, I think it would have hit this number first. Like this would have been the stopping place for the algorithm, like $90 or something. And then it would have tried to reset it. It would have tried to, like if this had actually squeezed. And I'm basing that now on what I'm finding in AMC, which is a very similar pattern. So anyways, that's it. Hope you enjoyed this. I hope it was really helpful. I think it's personally like crazy stuff. Man, let's hope this runs up today and tomorrow and this week. I can't promise anything, no price targets just yet, but we'll see as this thing starts developing, maybe where it might go.